Hello folks, this is Kurt Cambier from Centennial Capital Partners with our September 2014 Educational and Economic Update. In this month's video, we'll be discussing a couple of the economic events that occurred last month and provide some insight into what they mean for you as an investor. Please stay tuned for the important disclosure statement at the end of this presentation. September overall was a solid month for the U.S. economy. The labor market continued to improve, and the latest second quarter GDP estimate showed that the economy grew at a 4.6% clip in the second 3 months of the year. Most importantly, the growth was shared across multiple sectors, which is a very positive sign for the rest of 2014. With the economy in a firmer footing, analysts are paying very close attention to the Federal Reserve. The Fed held an open market committee meeting in mid-September. After reading the economic tea leaves, the Fed voted to maintain the pace of its tapering and drop its monthly bond purchases to $15 billion. Now, this meeting was pivotal because it was the second to last meeting before the scheduled end of the Fed's historic quantitative easing program. Now, by voting to maintain this taper, the Fed has boosted confidence that the U.S. economy is doing well enough to take off the trading wheels. Now, the next move is interest rates, and the question is on everyone's mind: how long until the Fed raises rates? Speeches by several open market committee members show that there are different opinions on the subject. Some officials want the Fed to raise rates as early as the spring of 2015, while most analysts had predicted a little bit earlier. On the other hand, several other officials believe that the Fed should be extremely cautious and raise rates only when the Fed is certain that the economy has achieved enough momentum. These folks seem to be favoring a lowering somewhere in early 2015. Such agreements are healthy because there's a lot of room for interpretation of economic data and the debate of the effects of economic policy. However, these splits mean the Fed chairwoman Janet Yellen must craft a careful compromise or risk a public break that could cause volatility in financial markets. Why do interest rates matter that much to investors? The Fed has held interest rates at rock bottom levels in order to encourage lending and boost the economy. Now that the economy is improving, the Fed will need to slowly raise interest rates to avoid high levels of inflation, which negatively affect the economy by chipping away at the buying power. If the Fed raises rates too soon, the economic recovery could falter, and if rates are left too low, inflation could spike, causing an economy to grow too fast and overheat. Bond investors, rising interest rates will affect the market prices of bonds in their portfolios. As interest rates rise, bond prices fall, as do bonds paying higher rates become more attractive in the market. As financial professionals, we spend a lot of time managing these issues for our clients, and they are prepared for a rising interest rate environment. Bottom line, we know that higher interest rates are coming, and we just don't know when. The good news is that the economy is doing moderately well, and the signs favor continued growth this year. Looking ahead, investors will be turning their attention to the release of third quarter economic and corporate earnings data and to see how the quarter stacks up. We're also approaching midterm elections, which can often exert some pressure on markets as investors weigh how certain cautions and certain results may affect the government policies. Now, well, that's it for the September Educational Economic Update. If you have any questions, always feel free to call my office, 303-584-1161. We'd love to answer any questions you have. Coming soon, we do actually have, we're so close to getting the book out, folks. It's going to be out soon, and I promise I'll get one in your hands. And look for it. And we are set up a foundation, and I'll explain that as well for some charity events. Once again, this is Kurt Cambier, CFP with Centennial Capital Partners, signing off for the month of September 2014. And if you have any questions, you'd like any more information, always feel free to contact me. And remember, folks, the 3 L's of life: live large, laugh often, and love always, and pay it forward to anything. Now, here's those important disclosures you've all been waiting for. While we believe the information in this report is reliable, we cannot guarantee that. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. The economic forecast set forth in this presentation may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. Please consult your professional before making any investment decisions. And once again, our securities are offered through Cambridge Investment Research, a broker-dealer, member FINRA SIPC, investment advisor representative, Cambridge Investment Research Advisors, Inc., a registered representative. Cambridge and Centennial Capital Partners are not affiliated. Thank you, folks. I hope you have a great day.